Welcome back to Investing Talk podcast. Today, we're taking a focused look at Roivant Sciences. You shared some materials with us, and well, our mission is really to unpack what's most important to understand about this company right now.
That's right. We'll be looking at their financial standing, where they fit in the whole biotech landscape, and, of course, what analysts thinking about their potential.
And you, the listener, you want to get informed quickly but thoroughly. You appreciate different angles.
Absolutely. So we've gathered info from, a detailed due diligence report, some competitor analysis, analyst forecasts, trying to give you that well-rounded picture.
We'll highlight the key takeaways, the sort of aha moments, without getting too bogged down in every single detail.
Let's get started then.
Okay, so let's unpack this, maybe starting with the financial snapshot. The latest quarterly report, that's Q3 ending December 31st, 2024, reported back in February 25. It shows ongoing revenue generation from their biopharma operations.
Right, the actual drug development side of things.
Exactly. And while we don't have the precise figures right here in the summaries, the historical trend seems to suggest revenue growth, probably driven by, pipeline advancements, maybe some milestone payments coming in.
And it's worth remembering, for these early-stage biopharma companies, having minimal or even negative earnings is, well, pretty typical.
Good point. So a PE ratio at this stage might not be the most meaningful metric to focus on.
No, probably not. But what is interesting is their cash position. That seems quite strong.
Okay.
At the end of that same quarter, Q3, Roivant reported, get this, $5.2 billion in cash and equivalents.
Wow. Okay. That's substantial.
It is. And on top of that, they secured another $113 million through a private placement in Immunovant. So while these summaries don't give us a specific debt-to-equity ratio you'd need the full filings for, that this huge cash reserve strongly suggests, manageable leverage.
And solid backing for their operations.
Yeah,
Give some runway.
Exactly. Significant runway to invest in that pipeline. And speaking of the pipeline,
Yeah, this is where it gets quite compelling, I think. Roivant is described as an innovative challenger biotech firm focused specifically on immunology therapeutics, and they have multiple promising treatments already in advanced clinical stages.
which explains why the focus might be more on that growth potential rather than current earnings.
Right. This sort of frames how you might look at the company, given this promising pipeline, but the current lack of profitability. Is Roivant a compelling opportunity right now? That's the question.
Indeed. And it fits the pattern, doesn't it? Companies with strong pipelines, especially in hot areas like immunology, they often get valued on future prospects.
Yeah.
But it's not all smooth sailing. There are hurdles.
Okay, like what?
Well, the materials mention litigation risks. Specifically, there's an ongoing intellectual property dispute. It involves LNP technology and Moderna.
LNP, lipid nanoparticles, of that delivery tech.
That's the one, crucial for certain therapies. And this dispute, it looks like proceedings are scheduled into late 2025.
That could be a distraction.
It definitely could. Could divert operational focus, increase their risk profile. You might see some stock volatility because of it.
And just generally, patent fights and regulatory hurdles are always part of the game in this sector, aren't they?
Always key risks to keep in mind for any biotech.
So how does Roivant stack up against its peers then? The summaries list quite a few competitors.
Yeah, let's see. BioNTech, BeiGene, Summit Therapeutics, Teva, Intracellular Therapies.
NMABs, Dr. Reddy's, Moderna again, Ascendis Pharma, Quigen. It's a crowded field.
It is. But what stands out is a direct comparison provided between Roivant and BioNTech.
Oh, interesting. What does that show?
Well, both are medical companies, obviously. But analysts currently seem to view Roivant a bit more favorably.
Based on what?
Based on a stronger consensus rating, apparently, and a higher probable upside. The figures mentioned are around 59% upside for Roivant versus about 19% for BioNTech.
Okay, that's quite a difference.
It is. But on the flip side, Roivant stock is also flagged as being more volatile than BioNTech's. The beta mentioned is 1.25 for Roivant, 1.07 for BioNTech.
Higher potential reward, maybe higher risk or volatility.
Potentially. And interestingly, Roivant apparently has lower revenue but higher net income than BioNTech. And it trades at a lower price-to-earnings ratio.
So on that PE metric, it might look more affordable, quotation marks around affordable.
Exactly. It appears that way on the surface,
Yep.
based on that specific metric.
So turning to the analysts specifically, what are the experts predicting overall for Roivant?
Okay, so based on 7 analysts covering it in the past 3 months, the consensus rating is strong buy.
Strong buy. That's pretty bullish.
It is. It breaks down as 6 buy ratings and just 1 hold, no sells.
And the price targets?
The average 12-month price target given is $44.25.
Wow. Compared to the price in the source data, that's a huge potential upside, over 300%.
Massive potential upside implied by that average, yes. But there's a big but. The range is really wide. Targets go from a low of $12 all the way up to $129.
Okay, $12 to $129. That's a vast difference. Does that strong buy consensus really tell the whole story when targets are spread that far apart? What are some of the, concerns or maybe dissenting views driving those lower targets?
Well, that significant range really underscores the inherent uncertainty, doesn't it? Especially in biotech. Even the experts see a wide range of possibilities, those lower targets. They might reflect concerns about the timeline for key drugs actually reaching the market or potential setbacks in clinical trials. Always a risk.
Or maybe just a more conservative view on how big the market for their therapies will actually be.
Could be. Or maybe factoring in that litigation risk more heavily. What's also informative, though, is looking at the trend in these ratings.
How has it been changing?
Well, the number of strong buy ratings has actually increased over the past few months. It went from 2 back in December 2024, up to 5 by April 2025.
Okay.
And alongside that, there's been a consistently high number of general buy ratings.
So that suggests maybe growing confidence among analysts, perhaps driven by data readouts or regulatory news not detailed here?
It could suggest that, yes, a positive trend in sentiment at least.
And what about the earnings outlook? Any forecasts there?
Yes, the estimate for the next quarter's earnings is actually a loss. -$0.26 per share.
Okay. Still expecting losses in the near term.
Correct. And the range for that estimate is also fairly wide, from a loss of at 75 cents down to a loss of 12 cents.
But you mentioned something about their track record.
Right. It's interesting. Roivant apparently has a pretty solid track record of actually beating these EPS estimates.
Oh!
Yes. And they've apparently outperformed their industry peers in the last calendar year, specifically on earnings performance. So they tend to deliver better than expected, even if the expectation is for a loss.
Okay, that adds another layer.
So if we try and bring this all together, our look into Roivant Sciences seems to paint this picture of a company with really robust financial resources.
That $5.2 billion cash pile.
Exactly. A clear focus on these innovative immunology treatments and, well, considerable optimism from the analyst community about its future potential.
Right.
But, as you know, you absolutely have to acknowledge the typical risks that come with biotech. And specifically, this ongoing intellectual property litigation, which, could definitely have implications down the line.
So for you, the listener, the key point to maybe take away here is that Roivant presents a really intriguing case. It's a biotech firm clearly geared towards growth. It's got significant analyst enthusiasm behind it, even though it's not currently profitable. And that comparison with a peer like BioNTech really highlights the different kinds of investment profiles you can find just within this one industry.
And this overview, it's really just a snapshot, isn't it? Based on the information you shared with us.
Absolutely.
We definitely encourage you to delve deeper. Check out Roivant's own investor relations website. Look at their SEC filings. That's where you'll find the really precise financial details and the absolute latest developments.
Yeah, consider what parts of this discussion stood out to you, what questions it raises for your own research.
Think about what resonates and what else you need to know.
Well, thanks for allowing us to explore this for you today. If you found this valuable, please do subscribe, perhaps leave a like or drop a comment. It really helps us figure out what kinds of discussions you find most insightful for the future.